Okay, let's get started, everyone. We're going to look at Introduction to Forex Market in our Module 1 of this course. The content we are going to cover in this module may be basic to some of you who already have some knowledge in the Forex market, but my aim is to turn someone without any Forex knowledge into a Forex trader by the end of this course. So please, even if you have some knowledge of the Forex market, follow this course step by step because this course is designed to build your knowledge from one module to the next module. You might get lost when we move into some advanced section later in the course. Introduction to Forex. So I decided to break this module into three pieces. First, we're going to look at what is Forex. Then we're going to look at how does it function. After that, we're going to look at why trade Forex instead of the stock market or the futures market. Now, let's take a look at what is the Forex market. The Forex market is the foreign exchange market. What does that mean to us? It simply is the marketplace where we could exchange one country's currency for another country's currency. In this example, let's say we have $1 US. We can get $1.30 Canadian when we go to the Forex market and exchange it. Similarly, we can trade euro for the British pound, Australian dollar for the New Zealand dollar, and many more, hundreds of other currency pairs. Okay, now we're going to look at how does the Forex market function. Forex market is a decentralized electronic communication network, short form ECN. What does decentralized ECN market means for us traders? Example, if we want to buy an Apple stock, we have to use a centralized stock exchange like the New York Stock Exchange to purchase the shares. But when we are buying a particular currency, we don't know who the seller is. It could be anyone who is connected to the ECN Forex network at that particular time. So ECN Forex network is an interconnected network, as you could see. You could be buying it from this guy, you could be selling it to this guy. So we don't know who we are buying it from or who we are selling it to. Okay, now let's take a look at some of the main participants in the Forex ECN network. Central and commercial banks, other financial institutions, hedge funds and investment funds, corporations, example multinational corporation like Apple would trade currency to hedge the cost of their materials from China or any other foreign suppliers. Forex brokers, individual trader. Now let's take a look at why we trade the Forex market. One of the main reasons why we trade the Forex market is because it is one of the largest financial market in the world. According to 2019 data, daily volume of the Forex market is 6.6 trillion compared to just 200 billion in the stock markets and an estimated 450 billion in the futures market. Given the vast size of this market, it is very liquid and allows it to create unlimited potential trading opportunities for us individual retail traders. It also will allow us to create and apply many different trading strategies according to our trading style or personality. We are going to talk about trading strategies and style later on in the course. Okay, now let's take a look at one more important reason why we trade the Forex market. Of course, we all want to make money, but this is an important reason why we trade the Forex other than to make money. Unlike the stock market, the Forex market is open 5.5 days a week and 24 hours a day. Trading starts in Sydney, Australia at 5 p.m. on Sunday. That's 5 Eastern Time, and closes in New York at 5 p.m. on Friday. Every day, Sydney will come online around 5 p.m., and then Tokyo will come online at 7 p.m. Next, we have London joining the party at 3 a.m. Last, we have New York starting at 8 a.m. As you could see, these markets overlaps each other. So there's always a market open somewhere for you to trade. And they all connect to the Forex ECN market that we talked about earlier in the module. Okay, all of you, now you could stop dreaming about bringing in the door 24 hours a day. Just because it is open 24 hours a day, it does not mean you should be trading it 24 hours a day. But it is an advantage when we are starting out, especially if you have a full-time job or even a part-time job. You could trade around your working hours. And if you're doing another business, you could trade around your business hours. This also means you could trade anywhere from the world without waking up at midnight to trade. Later in the course, we will take a look at what it means to trade different time zones. Now, let's take a look at some more reason why we should trade the Forex market instead of the stock market or the futures market. Ease of access. All you need is a smartphone or laptop to trade Forex. You will see how easy it is to trade Forex later in the course when we start looking at the Forex tools. Low cost. No commission or very low commission. Bid and ask spreads are very low in the Forex market. Liquidity. Easy to enter and exit trades in both directions. Forex being a very large and very liquid market, it's easy for us to enter and exit. Leverage. Forex brokers offer very high leverage compared to other financial markets. This allows you to control large positions. Leverage could be a dual-edged sword. Make sure you're using it wisely. This could hurt you as much as it could benefit you. We will have a detailed look at leverage later in the course. Okay, guys, this is the end of our module Introduction to Forex. Next, we are going to move on to understanding currency pairs.